It's Fed Week, and that means we'll be getting the rate announcement on Wednesday afternoon. Ahead of that rate announcement, I'm joined on the trading floor of the New York Stock Exchange by Stephen Guilfoyle of Sarge986. Stephen, great to have you here today.
Remy, I can't tell you how happy I am to be here with you on this day.
Well, this is a very exciting time to be on the trading floor. We've had this Trump rally, which has brought elevated levels for the major equity indexes. So ahead of the Fed rate decision, what are you expecting?
Well, this Trump rally that you just mentioned has added about 7% to U.S. market cap, so it's been significant. But we're at a point here where almost everything is technically overbought. We typically get a little bit of a swoon here in mid-December, so you may see something of a buyer strike at these levels. But with tax laws likely to change very soon, you might see a seller strike too. I really think volumes may dip here for this week and for next week, regardless of what the Fed does, regardless of some pretty heady macro that we have coming out in the later part of the week. And trading could be very light until the Christmas holiday, where we get the typical Santa Claus rally at the end of the year and beginning of the year. And I think we will see it again this year.
And Sarge, I think this is a great time to be talking about sectors given the record run-up in prices we've seen. So what sectors look attractive and which ones don't?
Well, I guess it's easy to say financials because everybody's saying financials. And that's still true. Even though they are the leaders, the banks, consumer finance, capital markets, the insurance companies, they're all going to be in a pretty good spot for a little while, especially since the marketplace, both equities and debt, have priced in more than one Fed hike. All right, they're pricing in probably already another hike at the March 15th announcement. So you probably have a full half point here being baked into the Fed funds rate by the marketplace, which is only good for the financials. But let's face it, the industrials have been hot, and within that sector, railroads are going to be hot. Not the airlines as much. I think more expensive oil is going to hurt them a little more. But the guys who transport oil and other commodities such as coal, I think they're in a much better sweet spot. Utilities got some catching up to do. They started last week. I'd be a little afraid to be overexposed in that area, but I don't think you want to be completely out of anything.
And Sarge, we only have a limited amount of time, so unfortunately we have to limit the topics. But we've seen oil prices tick higher following this weekend's agreement between non-OPEC and OPEC members. And of course, we can't forget about the dollar rally we've been seeing this quarter after the election. But heading into the new year, what do you think are some of the other event risks or commodities or any other topics that investors should be paying attention to?
Policy. It's all going to be about policy, and not just monetary policy, which we've always focused on, but fiscal policy. Look at the cabinet that Donald Trump has proposed. I'm not saying anything bad about it, but aside from our generals, which I really like those choices, we have a very, very pro-business crew. I mean, almost from top to bottom. These guys come from the world of business. They're all 300 hitters in that world, and we're going to it's almost a certainty that we will be tougher negotiators going forward. Just look at the cages that Donald Trump is rattling with China. A lot of people are scared about that right now, but you know what? It's probably just a negotiatory ploy. He's probably trying to make them as nervous as we have been. I think that going forward, I'm not saying this is all going to be wonderful, but we are going to negotiate from probably more of a position of strength than we have in the past.
And Sarge, when we hear about these comments regarding China or other potential foreign policy moves that will be happening once the president-elect comes into office, how do you get a handle on what will actually happen and what has still to face legislative hurdles?
You know, it's tough. Tough question. You're going to have to hedge yourself somewhat. I don't think we're going to get everything that the president-elect has proposed. He might not even... That might be another negotiatory ploy to ask for the world and settle for less. He wants a 15% corporate tax rate. Maybe he'll settle for a 25% corporate tax rate. There's, in almost every facet, he's pushed it further than probably he is willing to settle. And that's, you ever buy a car? You ever buy an expensive piece of furniture? That's what we all do when we buy something. Well, I think he's gone that route. And I think that policy will be somewhat slower incoming than we expect. I think once the president is inaugurated, maybe earlier than that, we'll probably see some violence in the marketplace. But once the president is inaugurated, people are going to say, all right, we've already had this run. Where's the policy? And it might take a year. So I think we're going to have a fairly violent January.